Hello. Cool. The Korean bro. How are you doing? Mm. Tonight? Oh. Okay, what I'm going to do is look through four companies that I think are gonna go up soon because it went down from all-time high a lot. And there are four companies. mm, And these four companies went down uh, the most out of 50 companies that I picked. Okay. And they are Palo Alto Networks, PayPal Holdings, Tesla, and Cisco Systems. Hmm. First things first, everybody all knows that Tesla went down by as much as 35%. So it's huge, right? So there's a um, room, enough room upward, and see how people views this situation. Okay. Uh. Okay. Let's see first this one. Tesla's the biggest competitor is BYD, and the biggest issue here is that BYD, in terms of electronic car market, BYD excels Tesla. And let's see how this goes. Okay, let's read this one. Tesla versus BYD. BYD launches price war, rose out $233,000. Unite supercar. Okay. Okay, Tesla and BYD are the world's largest electric vehicle makers, becoming more direct competitors in China and much of the world. A lot of attention is focused on EV startups such as NIO, Li Auto, Xpeng, Rivian, um, Livian and Lucid. Efforts by traditional auto giants such as General Motors, Ford Motor, and Volkswagen are to get coverage. However, Tesla and BYD stand apart. In 2022, China EV and Barry John BYD's vehicle sales raised ahead of Tesla's. For all battery electric vehicle, BYD seized the crown in quarter 4 2023. Barry John BYD. Okay, so BYD not only they make car but also they make battery. Okay, Tesla reported a big earnings drop in quarter 4 2023 and warned of notably lower delivery growth in 2024 with few positive catalysts before 2026. BYD reported weaker than expected preliminary quarter 4 earnings as price cuts likely took a toll. Overseas sales are a key area of growth and margins for BYD, which just announced its entry into Indonesia and plans to build a plant there. Overseas sales are a key area of growth and margins for BYD, which just announced its entry into Indonesia and plans to build a plant there. BYD reportedly is moving a factory in Mexico, which could open the door to the US market. Tesla has slow walked plans for its own Mexico site for months. Tesla stock had a strong 2023 but peaked in July. Shares tumbled below key levels to start 2024, with Tesla cutting prices in China and Europe and other negative news. The EV maker is struggling to grow through profit margins that are now in line with traditional automakers, but Tesla stock is not valued anything like a traditional automaker. BYD stock has fallen sharply in recent months amid price war concerns. The start of the year is seasonally slow for China EV sales, and competition is intense there for BYD, Tesla, and everyone else. BYD itself kicked off a new round of China EV price cuts in February, even as it launches the 233,000 Yunnan supercar. More broadly, signs of slowing EV demand around the world are weighing on EV stocks generally. Let's take a look at BYD versus Tesla, as well as BYD DF stock versus Tesla stock. Okay, the Tesla delivered 484,507 EVs in quarter 4. beating analyst views of 463 according to consensus compiled by Tesla. Full year deliveries hit 1.81 million, just topping the company's 1.8 million target. Credit strong China sales. Okay, meanwhile, BYD on January 1st announced record December sales of 341,043 EVs, including plug-in hybrids. Quarter four sales hit 942,779, with full year sales of topping BYD's target of 3 million. Notably, it sold 526,000 for non-all-electric BEVs in quarter four, up from 431,603 in quarter three, the top Tesla for the first time with a clear margin. In January, BYD sold okay, there you go. Anyway, BYD its sales went slightly up more than that of Tesla. And that's the point here. Tesla price cuts. Tesla slashed prices worldwide in January 2023 with future further cuts, big inventory discounts, and other incentives since then. In January 2024, Tesla cut Model 3 and Model Y prices in China modestly after some token increase in the fall of 2023. Also in January, reduced Model Y prices noticeably in several European countries amid warning sales and reduced subsidies. However, on February 12, it raised the Model Y prices in some key European markets, though mostly still below where they were before the January cuts. In February, Tesla notched raised the US price of its refreshed Model 3 long range by $1,000. With production still limited in the short term, on February 10, Tesla cut prices on its first two Model Y variations by $1,000 through February, but brand new inventory is still discounted by far more. Back in the US, the first two Model 3 variants lost their IRA credits as of January 1st due to tighter battery sourcing rules. So could adopt different batteries over time, but would likely be more expensive. Germany abruptly ended EV subsidies of 45,000 euros as of December 17. France ended subsidies for EVs made outside of Europe as of December 15. That hits the China-made Model 3, but not the Berlin-made Model Y. Tesla Cybertruck, other vehicles, Tesla production, BYD expansion, Tesla versus BYD expansion. Ramping up EV and battery production with more China plants coming online. It's already building an EV factory in Thailand set to be in production in mid 2024. BYD has announced it'll build an EV plant in Brazil, Hungary, and now Indonesia. The company confirmed recently to Japan Nikkei that it's moving a plant in Mexico with talks underway with government officials. It's unclear if a Mexico plant would serve the US market. BYD has said it has no plans to enter the US market for personal vehicles, though it does build EV buses in Lancaster, California. Made in Mexico BYD EVs presumably would avoid punitive tariffs on Chinese goods, but probably would not qualify for IRA tax credits. BYD launched several new models in 2023 across a wide array of prices. In late February, BYD announced even deeper discounts across a growing number of models, that's squeezing traditional gas burning alternatives and spurring IC and EV rivals to follow suit. Okay. Tesla traditionally has not mass produced its own batteries. For lithium-ion batteries, a joint venture partner Panasonic makes these cells and Tesla packages them. It also buys lithium-ion batteries from South Korea's LG. Tesla also has bought lithium iron phosphate batteries from China's CATL. Tesla is working on 4,680 batteries first touted at the 2020 Battery Day. The 4,680 batteries are standard lithium-ion chemistry The larger form factor offers potential for various benefits and cost savings. Tesla's 4,680 production has picked up output in recent months, but is still relatively low. Also, more than 3 years after the much hyped Berry Day, Tesla hasn't solved key technical hurdles to all of 4,680 mass production and cost savings. It's also not clear if some of the Berry benefits are coming to fruition. Tesla recently reduced its estimate range substantially on key Model Y variants, as well as the Model S and X, following new EPA testing results. The new estimates are more in line with real world experiences with Tesla drivers. The Justice Department has been investigating whether Tesla exaggerates the battery range. Okay, Tesla has its own supercharger network in its markets. That's especially important in countries like Australia, where third-party charging facilities are limited. Tesla has struck deals with Ford, GM, Rivian, and others to give those automakers EV customers access to superchargers. The US state will also adopt Tesla's charger standard soon. And this goes on and on and on. Whew. Hmm. Let's see what other articles we have here. Now, other electric vehicles stocks haven't exactly been rolling on the stock market lately. Their price slumps have led some pundits to believe they're undervalued. One of these even feels Tesla shares are poised to accelerate nearly 75% higher in price. Tesla bull continues to roar. That prognosticator is Morgan Stanley's Adam Jonas, who reiterated his overweight recommendation Tesla at a target price of $345 per share in mid February. In recent comments, Jonas, his team acknowledged the general bearish sentiment on the EV sector later. However, they implied many investors have too narrow a view of the company's business. In their view, Tesla also stands to benefit from advances in segments such as artificial intelligence and other hot tech areas. For example, it is developing Optimus, which it describes as a general purpose bipedal humanoid robot capable of performing tasks that are, that are unsafe, repetitive, or boring. The Morgan Stanley analyst said that our thesis on Tesla is that it is both an auto stock and an energy AI robotics company. In fact, our valuation of the core auto business represents just 22% of our $345 price target. In their view, while the current weakness in the EV market is detrimental to manufacturers such as Tesla, the negative effects on the stock's price will be short term. The great EV wave subsides. Jonas and his Morgan Stanley colleagues have been long-time Tesla bullish, but they've lowered expectation in the recent past. In January, they trimmed the bank's price target on the stock from a $380 to the present level, citing oversupply in the EV market as a key reason for the move. I don't share Jonas and his team's continued enthusiasm for Tesla. The great consumer rushing to EV seems to be over. Meanwhile, the company keeps cutting prices to bolster volume. I'm also troubled by the numerous accidents apparently involving the EV maker's inaccurately named autopilot feature. which make it seem as if the system needs more development and testing. When our analyst team has a stock tip, you can pay to listen. After all, the new letter. Okay. A coming wave of China EVs. Let's read this one. House lawmakers recently warned about China's industrial strategy to dominate the global automobile market and its EV makers gaining a backdoor to the US market through our key trading partners, calling for existing tariffs on made in China cars to be maintained or even increased. They describe the coming wave of Chinese vehicles that will be exported from our other trading partners, such as Mexico. Chinese car makers, including MG, BYD, and Chery, have been scouting for manufacturing locations within Mexico. Meanwhile, imports of Chinese cars in Mexico have been surging. While most credit Chinese EV makers for being extremely good, the Alliance for American Manufacturing focuses more on the government support they receive. Backstopped by heavy state support, Chinese automakers and suppliers have grown into industrial powerhouses that control the nodes of production for virtually the entire electric vehicle value chain. BYD, backed by Warren Buffett's Berkshire Hathaway, keeps its cost low partly by owning the entire supply chain of its EV batteries. Significant since a battery accounts for roughly 40% of an electric vehicle's price. No one can match BYD on price, period. Marco Pu, CEO of Asia focused car consultants Don Insights, recently told the Financial Times. Okay. Backed by Warren Buffett's Berkshire Hathaway, BYD. Okay. Let's read this one. Most investors wouldn't be surprised to know that Tesla is one of the best performing stocks in the last decade. It has skyrocketed 1,376% as of uh, the best performing stocks in the last decade. It has skyrocketed 1,376% as of February 19. This means that $70,000 investment in Tesla 10 years ago would be worth a cool $1 million today. This gain crushes what you would have earned putting money in an S&P 500 index fund. Tesla shares have taken a breather recently, currently sitting 51% below their peak price. But as we look out over the next decade, can these top electric vehicle stock make you a millionaire? Here's what you need to know about Tesla, okay? Changing the automotive industry. The business deserves a ton of credit for how it completely changed the global automotive industry. Of course, the climate crisis was a key driving force behind the need to bring about electric cars, but until Tesla released the Model S in 2012, There wasn't a truly successful EV that hit the market and had a broad appeal from consumers. Today, Tesla offers four key models in addition to the S. It sells the X3 and Y with a pickup truck on that way. In fact, the Model Y, which is a smaller SUV, became the world's best-selling car in quarter first 2023, beating out the Toyota Corolla. That's an incredible figure that points to Tesla's achievement this fall. There's no denying that from a purely product focus, Tesla builds some of the most stylish and tech-savvy vehicles on Earth. Add its design and its engineering pros to be a powerful brand, it makes sense that these cars can command premium prices. It's also worth pointing out that Tesla has lower production costs but developing scale advantages as it relates to its manufacturing capabilities. The company has been consistently profitable since 2020, while many rivals struggle to break even with their EV segments. Tesla sold 1.8 million cars in 2023, up 38% year over year, giving it a commanding share of the US market. Ongoing challenges. Despite an impressive history, the past couple of years haven't been too kind to this business. Macroeconomic headwinds, spurred by higher interest rates and ongoing inflationary concerns, make buying new cars less affordable for consumers. Focused on saving money and slashing their budgets, people can hold off on making a purchase until they have more confidence about the state of the economy. This is hitting Tesla's financials. Its revenue rose 19% in 2023, and this figure increased by just 3% in the last quarter. The slowdown is notable given the business was putting up ridiculous growth numbers for most of the past decade. And the current situation also highlights how competitive the industry has become. Tesla executives have chosen to cut vehicle prices numerous times to maintain or grow market share. But this didn't prevent Tesla giving up its global industry lead to Chinese rival BYD, which sold more units in the last 3 months of 2023. Lower prices coupled with decelerating growth are pressuring profitability. um, the business saw its gross and operating margin shrink considerably between 2022 and 2023. The path to 1 million, with the ongoing decline in Tesla's stock price, it trades at a price earnings ratio of 46.4 today. This is a much more attractive valuation than just 3 years ago. But still, view shares as being expensive. Tesla's remarkable success has invited a lot of competition, both from legacy automakers and EV-focused upstarts. Consequently, the next 10 years will be much more difficult for the business when it comes to posting strong revenue and profit growth. Investors hoping for similar returns to the past should lower expectations. However, Tesla could still make you million if you believe in its prospect to maintain a truly long-term horizon that spans multiple decades. Okay, so what we can point out from this article is that this EV market is going to be more competitive as the time goes on, but uh, without doubt, I mean, Tesla has been number one in terms of vehicle market, EV market, and that there's a competitor named BYD, and BYD, its sales has gone up recently in the last couple of 3 months. It went up much more than that of it went its sales went up more than that of Tesla, but still, it's got a lot of potential. And if you hold it long term, then it's gonna make you a millionaire. That's the point of this article. Okay. Impressive and worrying. Uh, there are a lot more articles to read, but I'm going to read this last because I don't have that much time here. Anyway, so the Tesla Cybertruck is impressive and worrying. Okay, let's see. There was a time when electric Tesla picked up, something designed to go head to head against America's most popular products. The Ford F-150 and Chevrolet Silverado seemed just a thing to take Tesla truly mainstream. Then in 2019, Elon Musk unveiled the Tesla Cybertruck, a bare metal box on wheels. It's the furthest thing from mainstream. The truck has attracted ardent fans and even more ardent critics. There's good towing and outing capabilities, even though it sacrifices some usability to its literally as design. For some customers, the sacrifice is undoubtedly worth it. But it may be more of a question about whether Ford and GM really need to worry. If it's a contest for eyeballs, they do. Even when I parked a rented Tesla Cybertruck next to a hot pink McLaren supercar in a shopping center parking lot in California, the people in the McLaren couldn't stop talking about the Cybertruck. Everywhere I went, the huge shiny silver truck was a crowd magnet. Drawing young people who been waiting to see one in real life and others, usually older, who had no idea what this thing even was. The Tesla Cybertruck looks like nothing else on the road, and its size is not quite as long as the Ford F-50, but somehow it looks even bigger, is even more eye-catching. Of course, once the Cybertruck has been on the market a while, its draw will subside. Now, there's a lot to like about the Cybertruck, but it also embodies a disturbing level of individual arrogance and hard, unforgiving still, concerns for the safety of others on the road, and even the practical needs of its own users appear to have been placed second to a design and engineering directive spearheaded by Tesla chief executive Elon Musk. Wait, this article is too long. Let me just skip, okay? Oh, okay, this is it. And see you and have a good night, everybody. Okay, 2024, February 25th. Okay, see you and bye bye.